Welcome back to the HBW Roundtable Series. Today we're here with Chuck Reinhold, President of our Investment Advisory. Chuck, can you talk a little bit more about the tactical money management aspect of the business?
Oh, absolutely. You know, there's a lot of misconception regarding tactical money management, and I think hopefully I can try to make this kind of simple. There's really three things out there going on. One of them is just a passive type of an investment, something like an index mutual fund. With an index fund, the fund is not a fund manager who's making a stock selection. They're simply trying to buy a segment of the market, and they just hold that and try to mirror that index, whether it's the S&P 500 or the Dow. In a traditional mutual fund, you're going to have a money manager or a money management team who's going to make investment selections. And say, for instance, if the S&P 500 stocks, maybe they're picking 200, trying to pick 200 of those to put in their portfolio, and then hopefully they're going to beat the index. But unfortunately, many times that doesn't happen. There's a recent article in the Wall Street Journal that really talked about the fact that that is sometimes isn't there. People might be better owning an index fund. Tactical money management is very different. Whether you're in an index fund or a regular mutual fund, there's really no defensive mechanism. Those kinds of funds are going to be in the market all the time, regardless of what market conditions are happening. So there's not really a defensive strategy. Tactical money management is very different. In a tactical money management environment, we would have discretionary authority on the account, and our money managers would actually be moving your money in the market when it makes sense to be in the market, and ideally out of the market when it makes sense not to be in the market and take the risk off the table. And so tactical money management is a way to have your money actually managed for you on your behalf so that you can have maybe less fear about investing.
Sounds like magic.
Yeah, well, ideally that's the way it works. We really shift the risk from the stock market, you know, just sitting back and hoping the stock market's going to do well. We shift the risk from that to the skill of our money managers and how good they are at managing money.
When I think about tactical money management, I think it is, like you said, misunderstood. From the client perspective, don't understand it, and I think some advisors don't even understand it, but it really is an asset class, and I don't think it's coined very well in some of the periodicals that we read when it's passive versus active. It might be with active. Would that make sense to you?
Well, investors' time frames have shortened, and the shorter their viewpoint, if you want to keep them happy, the more active you have to be in order to accommodate them, because when you're looking at a daily return, you can make yourself miserable. But I think a lot of investors appreciate someone to have on their back to begin with.
No question, and probably one of the greatest things about HBW and our company is that we make all of those options available to our clients and discuss those different options with them and really give them a choice of which one's going to make the best sense for them.